Hello, my name is Raitis, and you're here at Farewell Total Return Investing. And in today's evening commentary, we're going to do a deep dive into my three back-to-back losses from today's trading session. Yes, I had three losses today in one trading session. I'm transparent with you and like nobody else. So I hope with this video you can learn from my mistakes and implement them into your trading protocols. Again, I will show you my trading protocols which would have held me back from trading today's session, or at least one was a human error. The only trade which wouldn't have been taken if I have followed my plan would be the third trade. The first trade would be an okay loser, no problems with that. Second trade was a human error, and then third trade could have been really avoided, but it was also with half risk. With that said, I hope you can learn something from my mistakes inside this video, and let's dive into the lessons. First of all, we're going to start off with the dollar index as usually for evening commentaries. You can see the problem is we're still in trapped order flow. We're currently trading at the consequent encroachment of this weekly bullish order block and the low of this weekly bearish order block and the weekly fair value gap. On the daily time frame today, we closed above the daily fair value gap, and we could reference the daily SIBI right here. For SIBI, the protocol is we don't want to see the market close and trade above the 50% of the SIBI, which is essentially the weekly fair value gap consequent encroachment. So this would be an invalidation level for shorts if we close above that. On the 4-hour time frame, you can see, let's see what we have here. We could trade into the redelivered imbalance. So market could retrace into the consequent encroachment, but I want to see immediate sponsorship lower from that level if we're going to see retracement up to that level. So this is an anticipation for that. We have this is a new day opening gap. Market could revisit this as a discount objective if we continue shorts, but let's see what Tuesday's trading does. Today was a seek and destroy profile, as you can see. Market has taken out, let's see what we have right here. We took out this daily swing low, and now we had like 3 consecutive very bearish candles on the daily time frame, which is also a low probability filter if we have overextension in the market. So that's that, and we also met a short-term objective right here within the 20-day IPTA data range look back. With that said, let's move on to the interest rate market. We have the T-note futures. Again, our invalidation level for longs was this consequent encroachment of this one for our BISI right here. Market closed below that, and we saw a sell-off from the daily fair value gap after we saw an initial consolidation during London session. And with that said, I really don't know what T-note futures want to do because we're referencing, again, same thing as with dollar, we're referencing the bullish PD array and the bearish PD array, which is the weekly volume imbalance and the high of this fair value gap right here. So market is essentially in trapped order flow, and we are still inside a consolidation profile, which is low probability. And sorry, this was not a daily fair value gap. Again, this is the same mistake I made on NQ, which was the human error mistake I mentioned. And we're going to go into that in a second. But Euro bullish straight into the volume imbalance as anticipated. Now let's see if we can see some upside from here. British pound traded higher and closed with a bullish daily candle because Euro GBP is as expected. Sorry, this is Euro GBP bearish. We traded below this short-term sell-side liquidity pool. And we can still reach below that low and even the rejection blocks for this week. So let's see what market does. Again, euro is fundamentally weak, pound is strong. That's why for longs we want to trade GBP USD because this is the leadership market for longs. Euro USD, lagger, or the sympathetic asset. In this case, okay, just gonna scroll through all the currencies. Now, gold, heavily bullish today. Now, why is that so? How can it be that gold is bullish and the XY has a daily bullish candle? Now, the XY was basically inside a consolidation today, and T-note futures were also inside a consolidation until basically London closed. Now let's see where gold had its rally. Gold had its rally before London close. And then after that, you can see we started to see consolidation. So basically, gold was allowed to rally while T-bonds and dollar were held inside a consolidation. Because if T-note futures are bearish, gold won't be able to trade as aggressively higher as it did today during the New York session. You can see after London close, we saw more of a consolidation and now we're retracing again. So this is intermarket analysis at its finest. And now let's get into my losses for this day. The first two losses were on NQ. Now the premise was market is trading inside a daily fair value gap CB high. We reached up into that as a premium objective, and now this is a near term objective, meaning it's within or right at the 40-day IPTA data range look back, meaning it's classified as a short-term target. Now the problem is when we are trading or have reached up into a short-term target, market can retrace and distribute existing long positions from a discount. That's why we need to anticipate and be very, very cautious with continuation trades. The first trade looked like this. We had the 1 hour order block and new day opening gap. Market runs, the anticipation was that the market runs H1 sell stops into a key higher time frame level. I wanted to see the market use the daily fair value gap CB high as an inversion level for bullish sponsorship. Now, the key thing is right here. I could have waited for lower time frame displacement in that case, and I could have waited for confirmation. Okay, you got a point there. You could do that like this and wait for confirmations, and we didn't get any confirmation whatsoever. That's why you could have avoided this trade in that case. But for me, this is my protocol. I could have traded this trade like this with all rules being aligned. We had a divergence with S&P 500 and with YM. You can see YM was already trading way down below the low as we saw the rally lower. You can see at 9:30 YM was way below the low from today's trading session already at 9:15. And when we had 9:15 Eastern Standard Time, Nasdaq was still trading above this low. So with that said, this is an okay loss. And second loss was a human error. I don't know why, but I had a daily fair value gap level outlined on the daily chart, and I didn't even check that. I accidentally drew this PD array out, something like this. I think it was, yeah, something like this. Let me quickly check. Yeah. So I had this PDRA drawn out, which makes no sense because we didn't have any daily fair value gaps right here. And then I checked, we also had literally no daily, weekly, or monthly PDR level inside this range, except only this swing high right here, which is a weekly breaker high, but didn't even reach up into that level. So we don't really care. I don't know. This was really human error. I don't know how this box came up into my chart. And then I thought, okay, maybe market wants to seek more sell side and trade below this H1 sell side liquidity and trade into the H1 propulsion block. You can see order block and trades down, displacement higher, which makes it a propulsion block. So I thought we could reclaim this propulsion block, and the stop loss was pretty tight for a good risk to reward ratio. Stop loss was initially down here, and yes, we saw an initial rally from that level a few times right there to rallies. So I got filled already right here. Market saw first rally, then another rally higher, but really didn't see any displacement whatsoever. Yes, stop loss could have been better placed, but I really don't know. This trade makes no sense because we have no institutional hard time frame reference point from which we could see institutional sponsorship. That was a problem. That was literally this was literally human error. I don't know how this PDRA came to onto my chart. Yes, it had a daily volume balance as a discount level, but on the lower time frames, you really can see there is nothing really which jumps off the chart. Mm-hmm. And you could have, I mean, for yes, we had this H1 sell stops, market trades into higher time frame discount level. Then we can look for displacement higher as institutional sponsorship. And yes, and then I split risk between, so the first two trades on NQ I already explained you. And then I split risk between YM and ES for another long. And yes, so this was basically the trade. Consolidation, market already took me out, rallied higher, but I wouldn't have taken any partials or would have went break even. So I canceled this trade. I got stopped out for a partial loss. And yes, you could argue this wasn't enough of a displacement for the market. And the divergence by that time already, it's 11, let me go into the 15-minute time frame. So when we hit our stop, or when we entered this trade, it was 11 o'clock. And at 11 o'clock, if we just look at the charts where we were trading at 11 o'clock, so all markets basically made it already below this low right here. Actually, except ES. Or ES also. ES made actually a slightly higher high. But again, market trades into, is this, let me see. Okay, this is still a short-term target objective. Market trades into that. We expect a run on sell side. And this is just where experience comes in. And this was another day where I really gained experience for this type of protocol. When we reach a short-term target objective or a near-term target objective, we anticipate a real manipulation below sell side liquidity before we want to step into the market. Like, zoom out on your time frames and then see what's the next logical level I can go long from, and this is the daily fair value gap. So a run below previous day's low is basically what we should have at least anticipated, and yes, we got that right there. Yes, you could have traded the setup. I mean, today was really kind of a tricky day. But then we have another protocol. That's what I also wanted to mention. And this is, we don't trade New York or London close session if we have a news release post 10 a.m. And this is probably the key why market really didn't want to displace, and we had all this massive consolidation, and now you can see, boom, this 15-minute candle on S&P, NQ, NYM. Now we're just placing higher during after New York lunch. Like, we're time for we displaced during PM session because of the fact that we had a news event post 10 a.m. and this is also protocol which I completely ignored today and which cost me a lot of money, or I lost 2.5 R. It's not that bad. I mean, we were one trade and we're back up. Like, it's very, very, very relaxed. But again, one trade was human error. This was completely my fault. First trade was a okay loss. I followed my protocol, except of course, as I'm going to explain you, the protocol that if we have a news post 10 a.m., which is President Trump speaking, and it's a high impact news event, and we don't have a high impact news event during New York session or London close, then things get really, really muddy. We are swimming in muddy waters when we have this condition where we have no high impact news release during New York session or London close, and a high impact news release post 10 a.m. If we have these conditions, then avoid trading New York session or London close. Oh, God. So, yeah. And that's why we're seeing displacement. I mean, the idea overall wasn't really, really that bad. I mean, you can see market is rallying, but we just were really too early. And the only thing, yes, you could have, after the stop run, yes, my stop loss was very tight. I placed it right here. You could have traded the 4-hour fair value gap right here, and with this trade and stop loss below this level, and then you would have a nice trade right now running 3 to 1 to 3 risk to reward ratio. So yeah, stop loss management could have been better on this trade. I must really admit, market stop loss was below the body of this candle. I didn't really see the market trading below that. But yeah, this is it. Especially coupled with the conditions that we have a news release post 10 a.m. Please don't be too conservative with your stop loss. And yes, guys, that's it. Again, our protocols are there for a reason. I mean, I must admit that. Yeah, Monday we did a great job, no trading. Like, why should you trade bank holiday? Plus, Monday protocols for trading were not met, so we had no executions. Yeah, my rules are there for a reason, and I'm right, and I broke them today. I didn't really pay much attention to the 10 a.m. post 10 a.m. news release filter for my trading session, and that's why the market messed me up today. Also, human error played into that, but what should you do? This is part of trading, but we learn from our mistake, and we're going to be more and more and more and more cautious of that protocol going into the upcoming trading days. So let's see if we have something similar like this for the rest of the week, so we can already prepare ourselves. So you can see, no, okay, except now Wednesday, also no trading. Wednesday I won't trade because we have no high impact news release during London or London close, and we have a high impact news release post 10 a.m. So tomorrow is exactly the same exact criteria as today. So that's why if you see me trading tomorrow, please call me. I don't know, I don't want to say any bad words, but then literally I'm lying to myself and I'm not following my protocols if I will trade tomorrow. Because this is the same scenario. We have a news release post 10 a.m. and no high impact news release for New York or London close. So I hope you could really learn some valuable stuff, because this is really like, you can take so much information out of your losses. This is insane. Like, guys, journal your losses, reflect on them, and also on your wins. You can learn from both. There's so much information, and people who do not reflect on their losses and what they did wrong, they just go blind into the next trading day and repeat the same mistakes over and over and over and over and over and over again. And yeah, so tomorrow we're going to be better. That's already a great sign. So tomorrow, no trading for me, guys. This is beautiful. I have some free time. I can prepare my other stuff that I need to do and focus on other things. So yeah, I'm happy that tomorrow is no trading day. And yeah, so let me quickly also go into my last trade for YM. I also took a position on that. And yeah, also the last trade I said I could have avoided that. Yes, I split risk between NQ and YM. And now we got into my YM trade. Again, the first thing I must say, I'm also a little bit obnoxious about that. I said I won't trade YM on the weekly outlook, but this was the only pair that had a really nice run higher from a higher time frame level. We saw institutional sponsorship, like these three massive up low candles. So I thought this may be the pair which will finally start to rally, because the other ones didn't show any willingness to trade higher after they ran sell side liquidity. But again, our daily filter says we don't trade markets which are in trapped order flow. That's why this trade could have been also completely avoided. And I think what we're gonna do is I will always record my trading checklist, and we will go through that together. And if I take a trade without doing that, then yeah, no wonder why it should be a loss, because then I probably messed something up. I didn't have any time to do my analysis properly. That's why in the future we will always go through my trading checklist together. And I don't know if I will post all of these things on YouTube, but I will definitely post them on my Discord channel. So feel free to join my Discord in the link in the description below this video. Feel free to join me, post our weekly outlooks, commentaries, and speculations. I didn't post the trades today because I kind of anticipated that this was low probability, and I only post A+ setups, which actually most of the time work out with a high win rate percentage. So yeah, the Discord didn't suffer this loss with me today, so I'm alone. But I saw many Twitter traders also fall into the trap for buys and got completely messed up. So yeah, with that said, this is it. So the trade was a 3-minute time frame. We saw institutional sponsorship higher. And then I entered as the market traded into the 3-minute fair value gap, just tapped it slightly. Stop loss was somewhere right here, below the breaker. Market runs or sell stop, displays higher. So, and I was targeting the highs to recoup my losses. But yeah, after an initial displacement higher, market dumped, consolidated, sold off, took one more time sell stops. And again, this can happen in conditions where we have news release post 10 a.m. New York session and London close can be really low probability, and then we could expand going to the rest of the day, and that's exactly what happened. Market took out sell stops, traded to the low end of the daily volume fair value gap, and we're rallying higher right now. So this was a quarter of a... No, we're already 25 minutes into the video. And with that said, I really didn't talk about what we expect going into tomorrow. But again, I'm not trading tomorrow. That's why we can just chill. And we're going to see us with a new evening commentary tomorrow in the evening, so we can really prepare everything for Thursday and Friday, which will be probably the most impactful and exciting days here to trade, because tomorrow could be really low probability, as we have the FOMC meeting minutes coming up post 10 a.m. And with that said, tomorrow I won't be trading. I hope you guys found this lesson and evening commentary insightful, and we can really learn a lot from our losses. That's why I encourage you to journal your trades. Wins or losses, doesn't matter. You can learn so freaking much from them. With that said, have a great night of sleep. I wish you all a pleasant evening. Stay safe, trade safe. I'm out. Bye bye.